Hey everyone, Steve here from My Crypto World. Well, today we're going to have a look at the total market cap again and try and gauge a direction the market may be going in. And also we're going to have a look at the second biggest crypto player in the market. Okay, so looking at the market cap at the moment, so this is the total crypto market cap. Last week when I did my video, I hadn't updated my cycles, so I've done that now. And really interestingly is to see the market falling back into a more stable 30 to 31 day cycle pattern. So through this volatility that we've faced here, the standard 30-day cycle had changed compared to what we had had in the past. Typically speaking, the market moves in a 30-day cycle, but as we get near the top and as we get a lot of distribution happening near the top, that cycle of 31 days tends to get either extrapolated out, so it extends, or it gets condensed, and it makes the cycles become shorter. And that's certainly what we found throughout the recent distribution pattern that's happened here. You can see 24 bars, 26 bars, 24 bars, 27 bars, and on it goes, as opposed to the standard, if you averaged all these ones out here, you'd find it to be a standard 31-day cycle. So the last couple of cycles, we've seen a 29-day cycle, a 31-day cycle, and now a 30-day cycle as well. And we're right at the end of the current cycle, so the new cycle will kick off tomorrow morning. Now, in saying that, what we've done since our last video is pretty much we've just done nothing. We've moved sideways. The market hasn't done a great deal. At the moment, it's bouncing right on the support line, which we spoke about last time at $1.136 trillion. Now, that's not to say that it can't fall any lower. It certainly can, but I'm not too sure that it's going to go in that direction. It may actually just move sideways for a number of months before anything else happens. Now remember, when it moves sideways, if the market decides to move sideways and that's the direction it's going to go, it can become a very boring and dull market unless you're a channel trader or you're an intermittent day trader, somebody who might trade on hourly charts. There's not a great deal to do for investors. It's really a sit back and wait scenario. But I will say this, the longer a market or a particular stock or crypto moves sideways, the greater the upside potential in the future. So that's just something to keep in mind should the market decide to do that. Now, if the market falls below its current level of 1.136 trillion and closes below it, our next resistance is around about the $712 billion mark. So that really was the peak before the recent rise up that we saw throughout 2020 and 2021. Which is more than probable that it could do that. So it's certainly not a time to panic if it does. Although if you've just bought into the market recently, you may want to look at dollar cost averaging options if that is going to unfold, and try to formulate some strategy of what you're going to do throughout that period. Now, I've said time and time again on this channel, the market cap is incredibly low for the offering that cryptocurrencies provide the planet, as far as the projects go that back those cryptocurrencies. Sorry, not that the cryptocurrencies back those projects. I truly believe that in the next couple of years we're going to be at a $10 trillion market, and I'll go through some of that in another video that I'll be doing, and I'm planning for later this week. Now, let's just go to a quick news story here regarding Ethereum, which is the second biggest player in the market at the moment. And we'll just go through this. We'll just read through it. Arthur Hayes says Ethereum could reach 10K level by the end of the year. Arthur Hayes, the youngest crypto billionaire of American Africa and the former CEO and co-founder of the derivatives platform BitMEX, predicted Ethereum could hit $10,000 by the end of 2022. Notably, Hayes has once speculated a downtrend in Ethereum's price in an April blog post that came true. The crypto market is at the bottom or likely to touch the ground afterward. It will bounce, Hayes says, reiterating that Ethereum still has the potential to reach $10,000 by the end of the year or at the start of 2023. The analyst predicted even more volatility in the market for the midterm, saying that he would like to purchase Bitcoin at $20,000 and Ethereum at $1,300. So this figure decreases over 70% of Ethereum's price from its all-time high. Now, I'll go back to our charts in a moment and I'll explain to you why I don't think Ethereum will hit 1300. Hayes' statement of buying Ethereum at 1300 definitely expresses what he's onto. Ethereum price could experience quick price moves when the value plummets below the support level. It signs this possibility of further dips in the value to make the weak hand investors leave. Then, as we all know, the massive investment will come to form grounds under the support level that will make the bulls run again. Bitcoin experienced this is a good point to remember actually, Bitcoin experienced an 80% crash before setting an all-time new high, and it happened many times in the crypto market over the past few years. Likely, Ethereum could claim the speculated price of 10,000 in 2023 or in 2024 if it takes longer for the next bull market to happen. So let's go and have a look at our chart and I'll explain to you why. I don't believe Ethereum will fall that low. It'll certainly fall lower now. In our last long video that we did regarding market cycles, not a great deal has happened. If you just go quickly to Bitcoin, you'll see that it's still bouncing along a nice support line that we've got there. It hasn't really done much, and most coins actually haven't faltered much at all. Ethereum's a little bit different. It actually has dropped, and it's dropped today. So you can see Ethereum now, it was bouncing along this beautiful line here of $1,707, which was a strong support line for the crypto move when you go back in time and have a look at how it's used that support as a floor to bounce off of and move up from. Now we can see for the first time in a long time that Ethereum today has broken through that. Now, that article suggested that it would drop down to maybe about 1300. I don't think it will. I think it'll stop at about 1430 before it moves up. And the reason I say that, when we go back in time, 1430 was actually the previous all-time high we had all the way back in January 2018. And that's an incredibly strong support line for Ethereum. So it's almost there. It hasn't got too much further to fall. Maybe, what are we at now? Let's get the exact price, 16. Oh, it's come back up. So we're at, 1542. So what I'm saying, it might have another another 100 points, $100 to lose off that before it finds strong support there. And you can see here back in January 2021, the crypto had some major resistance around that. It actually moved sideways for a while. Probably a little bit of consolidation going on there before it broke through that, and then came back down to find support at that resistance level and then shot off from there. So it wouldn't surprise me if Ethereum does fall a little bit further, but certainly not to the extent that that article suggested. Although certainly this is just my financial opinion and my technical analysis only. Now, a couple of other things I just wanted to touch off on for those who are feeling a bit of pain at the moment in the market, which we always try to tend to touch base on. This is a quote from Warren Buffett. And it says, if you expect to continue to purchase stocks throughout your life, you should welcome price declines as a way to add stocks more cheaply to your portfolio. Now, we've spoken about this a number of times about dollar cost averaging, vitally important, and that's a quote from one of the world's best investors and probably the most well-known investor in the world. A couple of other quotes from Nick Murray. Now, Nick Murray is similar to Warren Buffett, probably not as well known throughout the world, but he's a master at what he does. And he just goes on to quote that declines are temporary, gains are permanent. And one last quote from Nick Murray is that all financial success comes from acting on a plan. A lot of financial failure comes from reacting to the market. So remember, we've spoken about this a number of times. Try not to react. I know it can be really difficult sometimes when the market isn't going the direction you want it to go, but it's all about holding on for the long term and trying to get the best out of it that way. This channel is dedicated really to long-term investors. I've mentioned it a number of times. I'm not really a short-term trader, although I have taken some trades out at 3 months I've gotten out of them, or 6 months I've gotten out of them, but they're few and far between. Most of my trades are at least 5 to 10 years long. Anyway, that's it for this week. I hope that was useful information for you. We'll catch up with you in the middle of the week with some other news articles that are happening at the moment. And until then, take care. Cheers.